Good afternoon, everyone. This is Rose with Brooks Price Action Team. Today is October 16th, Wednesday, and I'm going to do a quick end of day review. All right, so yesterday we closed pretty low. It's been a great sell-off after a bear flag pattern at the open. Then we gapped down, and bulls pretty much gave up with bar 12, and we sold and we kept selling. So we closed the day pretty low. So I'm thinking 50% probability of continuation selling with possible new low. We might test the low of yesterday, and then is 75% sideways is price action for an hour or so, and then reverse back up. Now we had a variation of that today. So at the open is bar 1 here is a outside down bar, but it's a doji close. It's a trading range bar. It's not all that bearish, even though it closed a bear body below its midpoint, but it's fairly on its midpoint. So you could see that market is trying to sell and is trying to come down to these lows. But we do have, even though a follow through, we unfortunately couldn't make a new low. We could not test yesterday's low. And in the meantime, on the higher time frame, such as 15-minute, we had a double top neckline. We tested the neckline at the open, but we only have a one bear bar taking out that neckline, and we're not able to break the Globex low. Therefore, there is no breakout from the Globex low. And then the first hour, even though it came down, you could see that hourly bar lower wick and then it turned around and closed higher. I did say yesterday on the daily chart that we are going to probably test the midpoint of this strong day, because the day before bullish day and then yesterday bearish day, bear day, that they are actually overlapping more than 50%. So it's kind of a trading range, just needs to go and test its midpoint before selling. So bears is here is continue to sell, but they failed. So in the meantime, we have 3 legs down. Leg 1 pull back, leg 2 pull back, and then leg 3. And we now have a bar 3 is a doji. Then we have a outside bar 4, and then we have an inside bar. So we now have an IOI, and then we have II 5 and 6. So I'm looking at this as, okay, the bears are totally failing here, and they're not able to sell. And one of the reasons is that bulls are defending the bar 68 low, because that is inverse head and shoulders, which I said yesterday that we might need to pull back. If this is not the right shoulder, we need to make a new right shoulder. And here it is, the right shoulder, and the market is defending here. So bulls are trying to come in, and bulls came in. So I saw the bar 6, I put a buy order above it, because to me it's the first entry long. Second entry long, even though it's a doji, I'm seeing weakness right there, so I want to enter. I was short, I took profit immediately, and then I entered long. So I entered a lot more contracts here with bar 7. I am targeting bar 77 high, and then I'm targeting bar 59 and possibly 58. So my targets, really I was more interested in the bar 59. I'm sorry, bar 50, bar 55. So, and I waited for market to get there. I also had a 1R, 2R target, which we met. So here's what I did. I measured for risk, which was right there. Then let's see, I entered there and stopped there. Sorry, it needs to be like this. So stop here, and actually I entered like this. So the stop there, and that was my 1R, and that was my 2R. So I had a wide stop because of this trading range, but that's what I went for. So pretty much everyone in the trading room this morning made money with this move. And I told everyone, take profit now because we're also testing a strong area. Bears were there. 1, 2, 3, 3 consecutive bars, 56, 57, 58, and then pause, and then they continued to sell, and then we had a wedge here which failed to reverse, so we had a measured move target. You could see how bearish it was. So we're testing here. Most likely this is a sell zone, and there are bears waiting here. So we do have a couple of legs up, maybe leg 1, pull back, leg 2, pull back, leg 3 right here, or leg 1, I counted with this. If you count for today, this is your first leg, pull back, second leg, pull back, third leg. If you count from here, since this is the most recent low, then you have leg 1, then you have leg 2, pull back, bar 10 moved underneath 9. So that's your pullback, and this is your third leg up. So profit taking started pretty strong there. Is surprisingly big bar 14. Most likely market is going to want to come down a little bit more. So I said many bulls bought above or the close. There was a bull flag here. They either bought above bar 10, which I did, or bar 8, doesn't matter. You just buy somewhere above there. And then if you buy above or the close of 11, you're pretty much stuck there. If you didn't take any profit, which I said everybody take profit here because we are going to pull back before we go higher to this zone, and we came down. This is a very strong bear bar. Probably wants to test some gap areas. So as long as these gap areas are open, okay, I'm looking to enter. So enter and fix my trade. So here, if you bought right there and you buy the close of 15, your break even is your average break even really is right here. But look, market actually went with bar 18 to where bulls actually entered, and then came back down because bears want to sell more, but they're not able to sell at all. So this pullback is these bears stuck. So they are selling because they're stuck underneath bar 14. We come down and test the 14 close, 14 low, but we're not able to close a bear bar where they actually bears sold, maybe 1 or 2 tick below underneath 14. So if these bears are exiting, then we're going to go right back up. So the next target is 11 high. And we tested 11 high because that's the last time the bulls probably entered and got stuck. So we got a gap bar 13. I'm thinking bulls are going to go and test and close a bull bar above 13. So I'm looking for follow through. But in the meantime, bears try to sell for another time and maybe a leg, and they totally failed. No one is selling, but look what happened. Even 29 is not able to close where the bears sold, which is 14 low. So that's it. Those bears are being squeezed out. This is a complete short squeeze. And I told everyone if you are buying here thinking this is a breakout, yeah, double bottom neckline, we're going to get a measured move. You're absolutely right. We are going to get the measured move. But there's a time and place, okay? You have to understand that when this already bought and pushed up with the third leg, and this is where market makers will trap you. Because this is the first breakout from this trading range squeeze, right? And the first breakout will fail. We're going to come back and test the midpoint of this trading range. And we just did that. Buyers showed up there. So this is a very premature buying. They trap you here. Then they make it look like extremely bearish. You end up selling. Then they trap you here. So you're trapped second time. And then this turns into a small pullback bull trend, but it's grinding up. Wants to test that climax bar high. And if the bulls actually close a bull bar above the gap bar 13, we're going to go and test bar 51 and possibly bar 37 area. So, but here is my measured move. I was more interested in this measured move and higher. So every pullback, bulls are buying underneath the moving averages starting today. We had some bear gap bars, but look, if you look at these bar 73, this was the last gap down close, right? Lowest close bar 73. At the open today, bears could not close below that. So that is right there, weakness number 1. Number 2, the left shoulder is not being able to breach, so the bears cannot continue. Bulls want to reverse this. Once I see it, I'm now looking for a gap bar above the moving average, and I want to see its high tested with a bull close. We have struggled here with several legs up. I have 3 pushes, so bears see a bear flag, they try to sell. Second leg trap right there underneath the moving average. So we're squeezing these bears even more. 3 bull bars, that's momentum for bulls. Their opens and closes are higher than the prior bars. So that means we're bullish. We're probably going to get a leg or two. So I'm definitely targeting 13 high. We get a bull bar closed above 13 high. So I told everybody we're going higher. So you need to now target the measured move and here. Now there are 2 ways to find a measured move. You can just measure where the bears actually started to show up. That would be your conservative measured move, which bar 43 reached. And then if you see that the bears are not able to take out the gap bar 41, which they tried, but it failed, you can see right there 41 gap is still open. And then the bulls show up. So here's a leg 1, leg 2 for bears. It's a pullback. It's a counter trend pullback. So now we go right back up. So I'm targeting the actual measured move. And then, of course, this zone. Yesterday's end of day review, I actually said we're going to test this area. Is if we cannot sell anymore and we cannot move underneath low of yesterday, market is going to go there. I also had a measured move targets from, that's one way to measure. Or you can take that low. This is what I measured. I also took profit there. But you could have also measured this way. That would have been your measured move. In the sell zone, you really needed to take profit on the higher time frame. And on the hourly time frame, also yesterday I said the bar 3 from yesterday's range is a sell zone. Is if we cannot sell and move underneath the moving average, we're going to try to test it. We're going to go right back to it. This is where I'm going to take profit. So you can see right here is market continued to buy right there, and we reached the measured move. So now I'm wondering if the measured move actually was from here. It doesn't matter, either or. We actually reached. Okay, I generally measure conservatively, so this was my measured move, and we reached it. But market is not stopping, so we get a breakout. This is definitely a squeeze. But the problem here is that this is exhaustion now, and we're getting closer to the end of day. But before then, we already had a swing starting with bar 48, 49, 1:30 p.m. And I generally look for about 6 bars. So I gotten my 6 bars, 1, 2, 3, 4, 5, 6, and bull bar closes. So now I'm looking for average 12 to 16 bar swing. So that's 7, 8, 9, 10. 11, 12. So that bar 59 exhaustion is bar 12. Now, next 4 bars could go up or sideways, and there you go. And we started to take profit right there. So I've taken profits and market comes down, but you can also add more. We actually held about, it's sideways, but to me, it was average 12 to 16 bars. But it really actually, bulls actually held about 24 bars. That was a 2 straight hours of longs, okay? But at the end of the day, we're at the sell zone. We are at the sell zone. So most likely, we're going to go sideways and pretty much be done with the day. But what does this mean? Could this be a shallow flag? Yeah, this looks like a flag. In fact, this is actually a double bottom bull flag. So after hours, we could continue to go higher. The next target is actually right here. But before then, first defense. There's also here breakout test area we tested, but we did close a bull bar. So I'm more interested in bar 55 low. Is not 2 days ago, so that was Monday. So bulls are trying to get to here, and then also get to here. So they're still pushing. So this is probably a bull flag. This gap is still open for bulls, so that's a good thing. After hours, we might get follow through buying. We might reach here, okay? or tomorrow, we're going to find ourselves around this area, and then we'll see. We might actually take out the high of yesterday, which was bar 61 high tomorrow, and then we could continue to go into the Tuesday's high, okay, which is this right here. So very interesting day. It was a short squeeze. We had maybe a 1, 2, 3. This is the truncated wedge, and then we had a higher low trend reversal, and we're making more higher lows, and the bears are totally getting trapped with second legs, and pretty much they're done. So I buy every pullback to moving average. I buy every decent bull bar, and I'm going to hold it until we reach here, which, as I said yesterday, we're going to go and check out. And that's what we did. So it was very difficult. Stop orders is right at the open. Bars are overlapping. There's not much of a stop order. Probably too low to sell for bears. And bulls started to show up. We do have a stop order. I could buy above 7, but you're still in a trading range here, except I think we're going to test the neckline, which is 7 to 7 high. So more bulls come in. This is a bull flag. You got impulsive buying, the 1 or 2 bars testing the pullback bar is low, but then not able to close a bear bar. Bulls will buy, and you got more stop order buy above 11. But the problem here is that you're buying into a 1-hour EMA, and it's now a bigger trading range. It's also breakout test from underneath bar 48. So it's time to take profit, and the market is already warning you that with bar 12, it's taking profit. Surprising the big bear bar, probably going to get follow through, but if you're trying to sell this, it's not going to be that easy to close these gaps. We're probably going to test this small double bottom breakout point. That is the neckline. And we tested and we kept the gap open. You got a beautiful inside bar, 16. You can buy 1 tick above and look for bar 15 high tested. Maybe midpoint of bar 12, sellers are waiting there. They want a second leg down. They sell, but they already had a bad start. Bar 18 is not all that great. Bar 19 is a terrible follow through. And bar 20 is suffering because bulls want to buy again. So market is making bull flags. Here's a 1 bull flag. Here's a 2nd bull flag, smaller bull flag. You got inside up 3 pushes. Bears see this as a bear flag. It's just that it's not happening because why? Well, 2 reasons. Reason 1 is the moving average is going parallel. So we have a trading range day, but it is kind of channeling up. Bulls have been buying underneath moving averages. They had a bigger gap here. They actually shortened the gap there. It's much smaller. Now there's no gap. So you can see buying is actually getting stronger and stronger. So, but in the meantime, because the moving average is going sideways, we're in a trading range. Bear machines also have been selling above the EMA when it gaps up from the EMA. Okay, so what does that mean? They're going to do the same thing that they've been doing for some time. So they did the exact same thing here, but they're not able to gap down from the EMA. So we have become always in long. They try to become always in short, failed. We resume always in long. They failed again, so the bulls are taking over. So this is basically just snaking around the moving average, oscillating is the right word to say. And the gap between the moving averages getting smaller and smaller and smaller. So I told everybody as the bull bars close on their highs and we keep more bull bars closing and go higher and higher, they're going to drag the 5 EMA with it. When the 5 EMA starts to cross above the 1-hour EMA, that's when you start to get big bars. Problem here is that we start to get those big bars before the crossover happened. So I told everybody in the trade room, watch out. I actually stayed longer. Watch out, even though we're going bar 51 range, we've got bears waiting, okay? We're going to end up pulling back with a couple of legs to the moving average once again. Then you can look for a buy signal bar and you can buy again. So things are not all that clear for a really strong buy to close breakout, but we're going to buy it anyway. So everything I said so far happened in the trade room. and I took profit and it came back down, but I'm still holding my long, right? As long as they don't close this gap body 41, we're probably gonna buy, right? It comes in and then we buy. So what does this mean? It means we're gonna keep going higher. And what is the best body here? Well, 49 is nice. I might buy it. 47 is a doji, but they are buying. You got a second close, bull close, 48, not all that great. 49 is buying because it's covering the upper wick. That means bullish momentum. So it's probably going to go higher. 59 is even better. You just buy. And it just keep buying. They are buying the bear closes. So that means this is small pullback bull trend is about to run bunch of stops above 43. They have already been running the stops. So as we go higher to test these areas, market makers are running these stops and we're squeezing these bears out of the market. Is also smart bears are covering. So they're buying back their shorts. And they're disappointed today. They wanted to have another bear bar follow through, but they're utterly disappointed. So we're back, but now we're in the zone. So that means auto zone. No, I'm just kidding. It's the end of the day fun, but it's the 59. It's an exhaustion. So it is time for us to take profit before it's too late. So it's been about 2 hours of fun for bulls since 1:30, another swing up, but they've been buying since this morning, right around before actually 10 o'clock. So it's been a great bull day, and it's just sideways down. You have 1, 2, and 3 push. It is kind of a bull flag here. Is after hours. I'm going to be curious, and I'm probably going to look at it on my phone just to see if the bulls are going to come in and they're going to get us to the 98. That should be. Oops, sorry. Hold on. Clicked on the wrong. Oops. I think I just crashed my application. Just give it a moment. I am done. Okay, hold on. Let me close that. I'm already done anyway. So we might test 98. That should be 98.50. So we might test there. After hours we could continue to buy. Or we're just going to go sideways and down, but I'm not going to trade that. Now we're in the sell zone, granted, but I think we need to go and test these highs again. This gap is still open, so after hours could be another buy. This is the area I'm interested in tomorrow, so we'll see how it goes. I will see you guys tomorrow. Fair weather is going to be streaming in the morning. I'll come in the afternoon. Bye, everybody.